is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss three things. First, a week that was, what is the outlook for dollar rupee pair for the coming week, and strategy for exporter and importer, and then trading ideas at the end of the presentation. So let me start with a week that was. As discussed in the last week video, that because of Russia and Ukraine crisis, there will be following impact. First, DXY will get stronger. Oil will move towards 110 and above level. FII will continue to sell in Indian equity markets. In last two trading sessions, they have sold close to 17,000 crores. And all emerging market currencies will weaken and rupee will move towards 76.30 and 76.50 levels. In the NDF, on Friday closing, was close to 76.40 level. So market has been moving exactly what we have discussed last week. Now let us see what lies next week. So now let us see what is the outlook for the coming week. In the coming week, we expect dollar index to move higher because of two reasons. On last Thursday, their job data was very fantastic, because of which the Fed chairman said that in the coming meeting of 15-16 March, they're gonna increase the interest rate. Second, we expect crude oil prices to move higher towards 130 to 140 dollar per barrel, because Russian newspaper has been saying that Russia has decided not to supply oil and gas to European countries like Germany and France. That is second aspect. Third, we expect FII to continue to sell across the globe because of rising tension between Russia and Ukraine, and Fed will gonna increase interest rate. Because of all of these three reasons, we expect dollar rupee to be in a pressure. So for the coming week, 75.50 to 76 will act as a very strong support for the pair, and there is a higher probability that the pair can move towards 76.50 to 77 level for the coming week. Overall, biasness of the pair remain on the weaker side. Any dips has to be taken as an opportunity to buy dollars. Strategy for thin margin exporters. Ideal strategy for thin margin exporter is that 50% of the order what they are getting, they should cover on a back-to-back basis. For remaining 50%, they can keep a stop loss of 75.80 or costing, whichever is higher. For covering, they can target 76.40, 76.90 and 77.10 for the coming days. For thick margin exporters, in our Friday's webinar, we have discussed that our medium-term outlook for dollar rupee pair is that in next 3 months, the pair will move towards 78 to 78.5 level. So for them, it is very important that they keep their hedge ratio close to 45%. They should not increase their hedge ratio beyond 45%. As the overall trend of the pair is on the weaker side, they can wait with a stop loss strategy. They can wait with a stop loss of 75.80 levels, and for booking, they can target 76.90 to 77.20 levels. Now let us discuss strategy for importers. From last 1.5 months, we have been saying importers that buying on dips is the ultimate strategy for them, and at least 45 to 60 days का cover होना चाहिए. If they have not covered that, any dips towards 75.80 to 76 should be taken as an opportunity to buy dollars. They can do two things. They can either they can buy forwards, or they can buy at the money call option and sell out of the money put option. Now let us discuss trading ideas for the coming week. Last week we had given two calls: sell Euro USD between 1.1250 से लेके 1.1320. Target was 1.11. It has made a low of 1.0925, so target is achieved. And GBP USD के लिए target was 1.3250 level, that also achieved. For the coming week, someone can sell Euro USD between 1.0980 to 1.1050. Target is 1.08, stop loss is 1.11 level. USD INR पे there is a buy call. In currency futures, they can buy USD INR March future at a price between 76.30 to 76.35. Target is 76.85 and 77 level. Stop loss is 75.95. With this, I will end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे next week. Thank you.